The Miningweb Weekly show with Peter Major. Lots to talk about this week. Peter, I know you're still in the North American region. Where exactly are you today?
I'm just outside of Elk City, central Idaho, probably the wildest place in all 50 states, and I include Alaska. The central part of Idaho is so wild, I'm not even sure they allow planes to fly over it, Alec. And you can forget about mining in the Frank Church Nature Conservatory, but we're right next to it. We've got patented claims, so we are allowed to mine. But yeah, there's some really, really wild parts of America right in the center of Idaho.
What are you mining there?
This is an historic gold production area that was discovered in 1862, and it gradually built up until 1942. And I think it was December 7th, 1 year after Pearl Harbor, that Franklin D. Roosevelt closed down virtually every gold mine in America. He said, we're in World War II here. We need serious effort going into the war. And so we don't want miners working on gold. They didn't see the advantage of that. They wanted miners working on lead and zinc and copper. And so that closed gold mining all over America for 5 years. And I always put metal prices in real terms, Alec. So we know that gold shot up from $20 an ounce to $35 an ounce in 1934. Roosevelt said, I'm devaluing the dollar. I got to stimulate the economy. So all of a sudden, a lot of marginal mines, and Anglo took advantage of this, like a lot of other companies in South Africa. A lot of marginal mines were certainly very profitable from 1933 to 1934. So that opened up big mining all over the place, all over the world. But in real dollar terms, by the end of the 30s, early 40s, you had something called inflation. So when Roosevelt was no longer president, but the U.S. let mines open in gold again in 1947, the gold price was already down 40% in real terms. And it continued to fall in the 50s in real terms. It continued to fall in the 60s in real terms. So, when you close down a whole mining area, unless the gold price is going up, it's hard to restart that area years later. Now, technically, you can do it. But financially, socially, politically, it's always hard to get a closed mine open again. And that's South Africa's big problem. Technically, reopening a lot of those deep South African mines is very risky and difficult. So if you don't have all the other environmental, especially policy behind you, it just isn't going to happen. So that's what we're trying to help some clients do down here. There's a lot of interest in this area now. It was a fairly rich producer, but never large producer here. It was never in the millions of ounces. And so mining companies today, you see, they are talking millions of ounces or they're not interested. So small mines are always tough, even when the metal price is going up.
Well, another thing that I know you have been focusing on in North America is silver, and we'll talk about that in a little while. The silver price is something that's attracting attention, even though silver-free South Africa, or even in silver-free South Africa. But let's kick off with the big story of the week, and that's been the interest now in De Beers. First of all, we had Botswana saying, we want a majority interest in De Beers. And this morning, the Financial Times has run a piece from Angola saying, we would like a slug of De Beers as well. This must be good news for Anglo American, given that shareholders have been thinking that De Beers is pretty much worthless. And now with a couple of sovereigns interested.
It's very good news. And I shouldn't say anybody's surprised. We are a little bit. Yeah, there's better interest in De Beers than we initially thought. And that is great news for Anglos. And that's definitely a lot to do with Anglo's share price. This company's gone from around 500 Rand share price a few months ago to 625. That's a pretty nice increase. And it's because Anglos does not have bad management, especially at the top. Anglos does not have bad assets. They've never had bad assets. So you need the market in your favor, whatever you're producing, whether it's iron ore, copper, etc. But hey, iron ore is not great now. It's okay, 106. And Anglo's has good profit margins on its iron ore. Copper, yeah, it's pushing an all-time high, but it's been this high 10 years ago. It's been this high 5 years ago. So it's a great copper price, but it's not doing anything like gold or silver. So it's great that there's real interest out there. People are recognizing what De Beers is, and it's going to be sad if Anglo sells it, for historical reasons. But we know why they're selling it. Shareholders, analysts, consultants, supposedly don't think it's a good asset. They think it drags Anglo's value down. And we've spoken before, Alec, that this is 2025, not 1925, when Ernest Oppenheimer was running Anglo's and he was bidding for De Beers. He had diamonds, and he and De Beers were just about tied with the diamonds, world diamond production. But De Beers was slowly dying, and Anglo's diamond side was rapidly growing. And so I think Anglo's took over De Beers just before the Depression, 1928. Ernest knew more about diamonds than anybody on the planet, and he was a very good businessman, and he knew how to run mining companies. So it made sense. And he had to hold De Beers through the Great Depression. There were 5 or 6 years he had all his mines closed down and was financing it himself or through the company and himself. But see, he knew the most, he believed the most, and he had a fair amount of control over world diamond production. Fast forward 100 years, Anglo's Duncan Wanblad doesn't have that kind of control, and it's a much more diverse shareholder base. So you do have to listen to your shareholders. Doesn't mean you have to do what they want if it doesn't make sense, but there's a lot more give and take that has to be done. So as your question, yeah, Angola comes out of nowhere, fully funded proposal. They say, we think De Beers should stay independent, maybe even listed. And we've got the money to back us buying as much as we want. And we want a dominant minority shareholder interest, which means 25.1. And they say the 4 African countries that produce diamonds should own it. That's a pretty good idea. South Africa, Namibia, Botswana, Angola. And boy, Angola, we always knew it was rich in minerals. We knew it was rich in diamonds. De Beers has already made a discovery in conjunction with Indiama. That's the government diamond mining branch. So I think this makes much more sense than one company taking it on. I don't think Botswana can fund it on its own anyways. And it gives the 4 countries a united front to take on the world. But yeah, I can think of a lot of positives, more than negatives. Yeah, I think it's good news. In the meantime, Anglo says, hey, we got 6 real bidders here, and we know who one of them is our favorite Indian bidder, Argaval.
Okay. Has he still got a big stake in Anglo?
No, unfortunately. No, I thought most of the good news had come out, and I thought there's, yeah, and I should say, as a fund manager, I would have kept it, but I'm much less of a fund manager than a corporate financier, Alec, and I've had to deploy the funds in private equity. So, yeah, is there more to come? I don't know. I'm more worried about world stock markets than I am about the individual shares. Billiton Angles jumped 4 or 5% each today. Because are there commodities something that's going to continue going up? Is iron ore going to go up higher from here? Is copper going to go up higher from here? I'm not sure. I don't believe so. I think these are very good prices, and I can't see them going up. Are diamond prices going to go up from here? Maybe. I think a lot of the good news is in the share. Anglos has really outperformed Billiton. So I think it's made the correction, the adjustment that was very obvious a year ago and 2 years ago and even 6 months ago. I think it's canceled that out. It realized the value, from 500 to 635.
But my question was not about Peter Major's stake in Anglo American. It was about Argaval, the Indian. Yeah. Well,
Shoot.
I met him. I met him in Davos. Had quite a interesting guy. Very interesting guy, and he was quite keen to own all of Anglo's. Is he still in there? Has he still got a stake?
No. I think he sold out. He sold out for a similar reason to what I did, Alec. He needs the money. His balance sheet is not that strong. And the fact that they lost the very good Anglo senior employee, Mr. Chris Griffiths, that's worried. Yeah, I know he would like to own all of Anglo's. And, my mother would too. Genuine. But, we got to tone our wants down to what's possible.
Yeah, it's a difficult thing to absorb in certain members of society. That's for sure. So Anglo's good news there with the Angolans coming up with their story. Just moving a little bit across the continent to the Congo, with Glencore now selling out of its copper mine there, and everything that's going on with the Congo and the US. Just give us some context there, Peter, because for those of us outside of the inside track, this is a bit confusing.
Glencore is hard for me to get a handle on relative to their mining. Glencore started out and was a large trading organization. Came originally from Mark Rich and Associates. So they're in commodity traders, oil, coal, metals, and they're one of the dominant big five, big six. But we've seen more and more traders are having to fund and get involved in mining to secure supply because it's very competitive out there. And mines can be more choosy now. Mines can say, hey, instead of just selling our commodity to you, we want to sell it to this other commodity trader down the street because he's helping fund our mine. Not only is he giving us better terms and a better price, he's helping us fund our mine. So it's getting more and more competitive if you're a trader. You have to expand out from your normal activities. Well, Glencore over the last 15, 20 years has actually got in the place where they're buying and owning mines. Now that's good. You get to secure your supply. But are they a miner? Sometimes I can't make the call. Sometimes I hear they've done a really good job running certain mines. Other times I've heard they've done an atrocious job. And they don't have their heart into it. Well, mining in the Congo, it's tough. There are some American companies that have left the Congo the last 10, 15 years. Freeport-McMoRan, one of them. Now, they are a fantastic miner. They just found it too difficult, politically, socially, and economically. Infrastructure, energy, government's always changing, and government's always changing policy. And as we've seen in South Africa, Gwede loves to brag. Okay, we've got consistent policy. I forget how many mining indabas Gwede has come to with recent changes in the MPRDA saying, okay, guys, you want certainty? I'm giving you certainty. From now on, this is what the BE is going to be. This is what the licensing is going to be. We're talking about, we're going to get on to the, what's the word for putting it all on electronics. And like Paul Miller says, good, Gwede's given us certainty until next year. And Paul is so right. The next indaba, maybe 2 indabas at the most, Gwede's got all kinds of new mineral resource changes in policy. And so cadastre still hasn't happened. Well, that's what's happening in Congo. So, and let's start with the commodity price, because that's what traders really are. Yes, they were the largest cobalt producer in the world. Glencore was. That one mine was producing 30% of all of Congo's cobalt, maybe 35% at its max. But the cobalt price has fallen from $85,000 to $25,000. That's a pretty big drop. And okay, it's a combination cobalt copper producer, which is good. So the copper price has held up well, but that mine was rated at 290,000 tons, and I think they're maybe doing 190. Maybe it's a 270 rated mine. They're doing one. So they've got operational problems as well. And I don't want to get into management problems. They got operational setbacks. They got a big fall of the cobalt price. They got the U.S. coming into Congo, talking with the government directly. They've had hassles with the government on royalty. Glencore's model was you had a high debt load funding your mines and you paid yourself back high interest rates. Well, the countries in Africa have caught on to that. And they say, we don't like these models because we never get our royalties. We only get a percent of profits or a royalty after you get all your money. You're not putting enough money back in. So there's a lot of reasons for Glencore to say, gee, if we can get a good price now for the mine, we can deploy that money elsewhere. And Glencore is a listed company, like a lot of big mining companies. It's got to show a better return than its competitors, or people are going to sell the stock. And they've always traded at what we think is quite a low PE compared to other mining companies. And we think mining companies trade at very low PEs compared to the S&P 500 in general. And we've heard the head of Rio Tinto say, I've done everything right. I got a great balance sheet, great assets, great profit margins, and I'm trading on a PE double digit. It's costing me double digits to raise funding. 11, 12% I pay for funding. And the average in the S&P is maybe getting his funding at 3, 4%, 5 maximum. And the IT companies and the new AI companies, they're getting their funding at less than 1%. How can we compete? So Glencore, lowerly rated than traditional straw mining companies, they can deploy that money better elsewhere. That's what they're selling the mine for.
Let's go back to silver, and
yes,
particularly from a South African perspective, because it hasn't really been a big story in South Africa, given that gold has been the story and then latterly platinum. Is there any way that you can play silver on the JSE, given that, not to my knowledge, we have any silver mines listed here?
I think Black Mountain is the only mine that you could say mines silver. And Black Mountain's a real polymetallic deposit, Alec. It's mainly zinc, lead, copper, silver, in that order. And so silver is even a byproduct of it, but it averages, I think, 1.5 ounces a ton, which nobody would even open their eyes in America. Silver is about the only commodity South Africa doesn't have. And there's a few tiny little silver mines, I think, north of Joburg that were run 120 years ago, but not big enough to warrant anybody's attention. Yeah, the only way South Africans, other than buying an international silver stock, and there's not a lot of them either, is playing the notes. There is a silver note. I don't think it's a full-blown ETF. I think it's a silver note. And I've looked at it a couple times. I can't even remember if I bought it. I think I did, just to see how it worked. Liquidity wasn't great, but I haven't looked at that lately. And that is a very good way. I love ETFs. I've loved ETFs from the first time I heard about them as a senior analyst, junior fund manager back in 1994. I thought this is the way of the future. And nothing has changed my view on that. It's only strengthened it as the years have gone by. Exchange traded notes, I like them too. And the more liquid they are, the more I like them. And yes, you got a higher risk with a note because there's not the metal backing it up like with the ETF. But when you've got large banks backing up the note, you're pretty safe. And again, liquidity, if you think the bank's in trouble, well, maybe you don't want to hang on to that note, but there's other banks that have it. Yeah. In South Africa, if you want to play something other than an international silver stock, the note is great. It's a good way to play it. And people play the gold price like that. Instead of buying Krugerrands, they buy that Goldie. It's great. You can get futures on it.
Would you be buying silver now? It's a metal that you know a lot about.
I wouldn't, Alec. And I don't trust it. I got burned on silver in 1974. Well,
that's even before Bunker Hunt.
That's before Bunker Hunt. I got what I should. Yeah, it had a couple little pullbacks, and then it really ran, and I missed out the big run in 1978, 1979, peaked at early 1980. And it burned so many people for so long, including the Hunts. And it wasn't the silver price that burned the Hunts. It was politicians that burned the Hunts. The Hunts were not stupid, and they had a lot of foresight. And they realized all these commodity traders were selling silver that they couldn't find out where the silver was coming from. It wasn't coming from stockpiles. It definitely wasn't coming from mines. So the Hunts were slowly accumulating what stockpiles of known silver they could get. They started accumulating shares in silver producers. So they thought they'd done all their homework. And the traders, we know a trader's attention span is something like a gnat or a fruit fly. It changes by the second. It doesn't live very long anyways. So the traders got caught short. They've been selling a lot of silver naked shorts that they couldn't deliver. And the Hunt brothers had bought up all those contracts. But hey, Chicago is tougher than Texas back then in the 70s and 80s. So the traders run to Washington, D.C., and they go, these guys they're going to bring about the collapse of the United States and maybe the world. They've cornered the silver market. The U.S. is going to a Great Depression. They got Congress to allow them to change the rules of delivery. And now, instead of having 30-day delivery and 90-day delivery, they get a year delivery because Washington, D.C. doesn't want the Hunts from Texas to bring down the United States economic system. So, all of a sudden, they thought they had the market cornered. The rules got changed. The same thing happened in Japan in the mid-90s. Somebody cute was selling platinum that they didn't have in Japan, and they got caught out. People went and bought the future contracts on the Topex, and they secured the supply. And same thing, the traders ran to the Diet, and they said, if you don't change the rule and give us a couple years to deliver, this is going to collapse Japan's economic system. So politics trumps all, even metal prices at the end of the day.
And even in developed countries, the philosophy or the definition of a developing country, I've been told, is where politics trumps economics.
Well, take a look at the States lately.
Yeah, that's for sure. That is
politics
true.
is trumping things.
But gold, getting back there, we had Deutsche this week saying that it expects the gold price to get to $4,000 next year.
I've even said that a couple times this year. And do I really believe it? No. If I really believed it, I'd be going long gold. But I 50% believed it because I just saw the momentum here. Gold's traded at 3,300, Alec, for 5 months solid. I think from April, May, June, July, August. It seemed to have hit a peak there, and the shares were starting to slip. And then this run from 3,300 to 3,800, $500 run, just we've seen in a matter of weeks. So when you can go from $3,300 an ounce to 37 in a few weeks, 4,000 looked very achievable. The market, the traders, everybody loves round numbers. It looked like it was going to be a certain this year. Okay, it slipped the last couple days. Now, is it slipping just because people are catching their breath? I think so. I think gold's got a chance at 4,000 this year, but I'm not going to buy it after something has run so hard, and I don't quite know for sure if what's backing it is going to continue. China's been buying more than any other central bank. The Chinese people have been buying quite a bit. Other central banks have been buying, but it can turn. It's not going to come back to 2000s, I don't think. I doubt it's going to come back to 3. But I think to buy it now today, fresh at $37.50, thinking it's going to go to 4, that's a pretty risky bet to make 8%.
And so your favorite gold play? We did talk a little while ago about Pan-African Resources. Is that on the list?
No, I don't have any favorite equity gold plays except some private equity. I've got a couple junior listeds that I would probably buy here, and it's because they have such large reserves and they're just raising their funding. So yeah, I can think of 1 or 2 juniors I would buy here because I know, not really an insider, but I know the management and I know the deposit. And it's got management with a really good track record. They've got investors like Sprott behind them, and they've talking 3-4 million ounces, and the shares not even discounting 1 million ounce. So, and there's some private equity like myself and my company are working on that we think we're picking up gold properties for 5 and 10 cents on the buck. But yeah, the listeds, Alec, definitely the big listeds. No, I wouldn't buy any of them here. And I just think there's too much good news already in them. And that includes our South African. I love all our South African shares, gold shares, but I think they're fully priced.
That's the voice of experience, having seen more than a few cycles. But Peter, I've been, I'd love to just talk a little more with you about Orion. We spoke about it last week. I'm looking at adding in our Ricardo portfolio, which is for newcomers to shares. It's going to be a monthly. It'll be a rand cost averaging, as we said, as I did, share last week. But Orion, why would Orion be suitable for that kind of person, given that these are people who haven't invested in shares in the past, or indeed, would it not be suitable for them? Is it too high risk?
No, I don't think it's too high risk because I think the assets underlying it are real. Too real to be ignored. And I don't know anyone who's been hyping up O'Keepe Copper and Prieska more than me. And I think we got to declare my company has a real interest in Orion. We did the transaction where Orion took on all of our clients' O'Keepe properties. So I'm not an insider. I'm going on publicly available information. So I don't think we're breaking any rules here. But yeah, the assets. O'Keepe Copper was mined by Simon van der Stel in 1870. Been mined by the locals, the Khoi for 1,000, 2,000 years. O'Keepe was the first listed mining company in Africa, as far as I know. It was listed in London in 1852. It was a regular on the New York Stock Exchange up through the 60s, big dividend payer. So O'Keepe Copper is well known. 120 million tons have been mined there at close to 1.9%. That's not bad in today's world. That's its history. What's the future? I think there's another 120 million tons available there at somewhere between 1%, 1.5%. And at today's copper price, that's very good. Now, that's just O'Keepe. O'Keepe has a lot of blue sky yet. We know all the ore bodies out there. It's almost too many ore bodies to decide which one are we going to attack first. Where are we going to get our initial payback from? That's just O'Keepe. Prieska is very well known, very well defined. Errol Smart was bragging up, we got more diamond drill rigs on this deposit than any deposit in Southern Africa, certainly in South Africa. And he did. I was out there, 15 drill rigs, drilling an ore body that we already knew was there, but he defined it so precisely. We know there's 32 million tons. It's like a long cigar laying on its side. Beautiful ore body to mine, large-scale underground equipment. And there's surrounding ore bodies. It's like fish in a pond. There's always more than you think is in there. And there's definitely more ore bodies. So copper, very good price, well-defined. The infrastructure is in place to get to it. All it needs is a little bit of money. Well, more than a little bit. But the interest is there. Parties are looking at it, swirling. We saw the announcement here over a week ago. Glencore is on their own willing to put up more than 50% of the money needed on the total budget. And they can take that total budget down to maybe 20% and get initial production going. But we'd like to see the full budget funded. Yeah, I think at this price, Alec, there is an analyst out there that can't find this thing justifies a 70 to 80 cent net present value, and it's trading at 20 cents. I think that's a big enough gap that private investors are not taking undue risk getting into this company.
And Warren Buffett says, find yourself a margin of safety, and that certainly is there. Now, an old pal of mine from journalism days, and he went off and did corporate communications with Liberty, and for some time now has been working in stockbroking in research. Sven Forsman, he has been banging a drum about core potash, but just banging the drum. You can't speak to Sven without him telling you what a fantastic operation this is. I need the major view on it, please.
I first saw this 5-6 years ago at the big mine in Indaba, the one in Cape Town, first week of February. And when I saw that project, I fell in love with it. I said, geez, it is so rich. It's close to the coast, real close, a conveyor belt that can take it from the mine to put on the ship. Rich, 57 to 60% pure potash, that trumped about every other project. A normal is probably less than 30. I think most places are mining at 20, 25%. So it ticked most of the boxes, and it's not in the DRC. It's in the Republic of Congo, which is on the coast, has good access. And you never hear any negative policy changes, presidential changes. I don't even know when they last had an election. So the Republic of Congo is much smaller, infinitely smaller, but stable. Great deposit. 500 million tons plus has already been 43-101 jorked. All it needs is $2.2 billion. And that's it. It's a big price tag. And the big companies, funny enough, you see they're happy to mine in Canada at $7-8 billion price tags, but there was a giant potash deposit. I can't remember who was setting up. They spent $7-8 billion in Argentina. And I saw on a couple of TV programs, $7 to $8 billion, a lot of money. That buys a lot of equipment. And they were willing to walk away from it because they didn't think it was economic. So I think that put the worry in people's heads. Okay, this has great grades. Okay, it has a turnaround of, I think the capital cost is $2.2 billion, but the earnings before interest, tax, depreciation is like $730 million. That's a great profit margin. It's just getting the funding. Now I see that Core, they've got a non-binding term sheet with a consortium of Arab money. They've got a contract from the Chinese to do all the building, construction. And the share price, Alec, it was kind of like the gold price. Only instead of going flat for 4 or 5 months, it had gone flat for 4 or 5 years, at half a pence. And I think it's now up to 4. Literally in the last, 10 months? It's gone from half a pence to 1 pence to 2 to 4. That's pretty nice appreciation. So we don't want to be timing things here, but I always hate buying something after it's just shot up like that. If it just shot up a little bit, I'd think about it. But to go from half a pence to 4, I don't know what the value of that is, but I wouldn't doubt it's still undervalued. But you got to say, no matter how much funding you raise, you probably still have to have equity shareholders put in some money. And people might say, oh, geez, there's going to be another rights issue. Are we going to get diluted? If they knew the funding is secured, people will probably follow their rights, but then the share price might be 5 or 6. It ticks most of the boxes, including country risk, because I haven't read or seen or heard anything negative, like we said, about policy changes or political musical chairs there. Would I put it in a portfolio? I would look really hard at it, yeah. And like I said, I looked hard at it years ago, came close to buying it, just thought somebody's going to get this and it's going to go. And we say that's why Anglos will never go down too low and stay there. It's got too good of assets. It will either sell them like it's doing De Beers, or it'll benefit from the rise in prices. But yeah, as Warren Buffett says, buy something with a big margin in it. Core Potash, it can compete. On its ore body, it can compete with anybody, anywhere. And its location is not bad. It's not in Central Africa. It doesn't need railroads, barges, pipelines. I don't know enough about it to make a strong recommendation here, though. But it's a real mine. It's a real deposit, and it looks like they're very close to getting a go-ahead.
Well, it would have been at 2 pence rather than 4 pence. It would have been a slam dunk.
Much easier decision. Yeah.
Not quite as easy, but certainly one to go and do one's homework on. Peter,
Yeah, keep it on the radar.
Keep it on the radar screen. So we are going to be at the Joburg Indaba, mining Indaba, in just over a week's time. So that would suggest you coming back to South Africa soon.
Real soon, Alec. Hopefully I'm walking around there on the 1st of October.
Look forward to catching up with you then next week from South Africa. It'll be a little bit easier as far as your sleep programs are concerned. And thanks again for
Much
getting
easier.
up very early in the morning to talk to us. But we look forward to the next time. Peter Major with Modern Corporate Solutions, and I'm Alec Hogg from BizNews.com.